growing my stock portfolio to $1 million. So basically, the two positions I'm currently in is a 2 times Bitcoin ETF and a 2 times Netflix ETF. Basically, in the morning, the position was down 1.55%, and in the afternoon, when the market closed, the position was down 1.38%. So, small difference, but nonetheless, we were down today. And so, the first thing I do want to talk about is Netflix, right? So, today we were down 0.69%. I was kind of disappointed in Netflix today, to be honest with you, but at least we weren't down 6, 7. So looking at Netflix, right? So on the daily chart, once again, we did manage to finish over the 9-day moving average. So yesterday we finished over the 9-day moving average, August 5th. Today, same thing, just barely. So what's the next step from here, right? I'm assuming, right, since we had two past green days, which was Monday and Tuesday, it's basically, I feel, right, that Netflix is trying to it's not trying to go up in an instant, or it's trying to continuously be green every single day, right? I feel like what Netflix is trying to do is trying to, keep it steady, keep the momentum from, keeping it like steady, like going slightly up, but then slightly down, slightly up, slightly down. I think that's what's going to happen with Netflix and these upcoming days. We finally got the confirmation of the 9-day moving average crossing over the 20-day moving average. We got the confirmation on the daily MACD that the blue line is over the orange line. So those two confirmations, to me, that signals that we could see potentially sooner or later, right? Netflix break out of the 50-day moving average. So on the on the 30-minute time chart. So in the pre-market, it was kind of like weird, a little choppy almost. But basically, in the pre-market, we were using the 50-day moving average as support. And then at the 9-minute candle, we broke above both the 9 and 20-day moving average. Usually, when the moving averages look like this in the pre-market, uh, basically we see a reversal. We see pretty much a continuous uptrend for pretty much the whole day. But usually that's not always the case. In this case, look what happened. It didn't happen. Basically, Netflix collapsed pretty much the whole day. So as soon as Netflix opened, we collapsed. And in the morning, we did manage to use the 180-day moving average as support for pretty much the in the morning and in the middle of the day, until finally we did manage to break over the 9-day moving average on the 1430 candle. And pretty much we just finished in the red today. It wasn't that good for Netflix. Now on the 4-hour time chart, it looks pretty good. The reason I say that, because the 9-day moving average, basically how you see right here, I'm gonna put you see where I'm let's see if I can do this. Just how you see this part of the screen, like how you see the screen right now, when the moving averages look exactly like this usually indicates that on the long-term trend, that particular stock is just gonna keep doing this continuous momentum of riding the trend towards the uptrend. So I'm pretty, satisfied that, Netflix is still stable on the 4-hour time chart, because, basically, if you kind of look back, right? When did? Okay, I think if I'm not mistaken, right? On the 16th, they reported earnings and they just completely cratered, right? And then after they cratered, you can see that the both 20 and 9-day moving average went below these three moving averages, which were the 50, 180, and 200-day moving average. And you basically get the point, right? We were just stuck under the 180 and 200-day moving average. We at one point wanted to break out of the 50-day moving average here on the 30th, and we couldn't. We got rejected, and pretty much we were just in a constant downtrend ever since. And now you can look at the 4-hour time chart and see that both the 9 and 20-day moving average crossed over the 50-day moving average. Once I saw that happen, I basically knew that instantly that, okay, Netflix is ready to start riding to the upside, and that's exactly what happened. Basically, we finally managed to also break out of the stubborn 180 and 200-day moving average. Currently, we are riding the 9 and 20-day moving average. It basically, we're kind of riding the 50-day moving average as well, almost. We did use it on this 1330 candle on the 4-hour time chart. So I am excited for Netflix to keep continuing this uptrend. So we'll see what happens next. So the next thing I do want to talk about is let's see. So an update on the $1,000 paper trading challenge. Today we lost $49 trading QQQ call options. So basically, just to keep it really short, at 11:55 I got into QQQ call options. So let's look at QQQ on the 30-minute time chart. And I said at what time again? 11:55. So 11:55, which is this candle right here. So I got into QQQ call options as soon as QQQ landed on the 20-day moving average, waited for a bounce, and then since I did see the bounce, but what happened was that I was expecting for QQQ to break through the to break through the 50-day moving average, since I saw that the 9-day moving average crossed over the 20-day moving average, but that didn't happen. So I waited to see if we could still make it out of the stubborn 50-day moving average. That didn't happen. So basically at 15:54, when I sold out the position, we took a loss of $49 trading QQQ call options. So basically the position was down 8.18%. So basically the strategy is to keep it really short. Once I'm down either 5 or 10%, cool, I'm out the position. And once I'm down 5 or 10%, I'm out the position. Once I'm up 5 or 10%, I'm out the position, just to keep it really short and to not revenge trade. So I'll keep you guys updated. And if you sign up with my Webull link located in the description below, you can get up to 10 free fractional shares. That is pretty much it. I'll keep you guys updated in the next video. As always, peace.